For a little bit more on how the spill might complicate the push for offshore drilling, we are joined right now by Kevin Book. He is a managing director at Clearview Energy Partners. Kevin, so glad to have you with us here. Thanks for joining. What do you make of this? I mean, we've even heard the Florida governor, right, Chris, come out and say he does not want offshore drilling anywhere near Florida.
Right. Well, this is the sort of thing that falls into the category of outlier, very worst outcome. The history of offshore drilling in America has been punctuated by relatively few spills. The big one in Santa Barbara in 1969 polarized California's sentiment about producing their very ample reserves, and they've never produced since in new areas. This is going to create a big impact, at least in terms of headlines. The question is what it really means when you get down to what existing law already says. President Obama, for example, came out and said, we will give more offshore production opportunities to the industry, but he was really saying Congress has to act first. That pushes the tougher decisions to Congress, and they just got a lot tougher. How
damaging are, I don't want to overemphasize Griff's comments, but he says this accident is proof that offshore drilling is not safe.
Well, I think that's a statement that reflects a viewpoint that you've seen in a lot of the coastal states. You see it in New Jersey, too. Their view is that they have a significant flow. In Florida, $50 billion in annual tourism revenue from their beaches. New Jersey, 15. Their view is that this is a direct threat to their economic livelihood. To say that it's not safe, though, is to run counter to the facts. It is, in fact, quite safe relative to the scale of potential outcomes. This is just, as I said, it's an outlier, and it makes the case that some of the coastal states have been making that there are risks that they should be compensated for, and that too muddies a bit of the drilling debate, because interior states don't want to necessarily give up revenues to the coastal states adjacent to the production.
Kevin, what does this mean for integrated oil companies, I mean, such as BP, and then what does it mean for the companies like Transocean that BP leases to?
Well, the incremental change you'd expect to see is going to be very small in the near term. The prospective new areas for production would have been 5 to 10-year stories, whether they be Alaska or Virginia or even some of the areas that were potentially available adjacent to Florida. Those areas would have been a distant tail. It may be even more distant now. So what you really have are the existing prospects that are going to be produced. There obviously will be a greater premium on scrutiny for safety and a greater focus on trying to make sure that there's adequate containment of any potential accident in the future.
Kevin, before we let you go, I want to get your reaction to the earnings. We've seen sort of a tale of two markets from ConocoPhillips and ExxonMobil. What's your take from these two sets of results?
Well, first, it's a good day to be disciplined, and it's a great day to be oily, not in the sense of which we just discussed it, but obviously to be levered to your upstream. It's been extremely weak in most of the demand areas that matter for the integrateds, and when you're looking at refining, that's a place you don't necessarily want to be trapped. So those caught in the refining trap are looking worse this earnings season than those who have a lot of leverage to the upstream.
Kevin, if we had to pick a best-in-class, get one name for you in this whole oil arena, what would you pick?
Well, Clearview doesn't cover securities specifically, but in general, you'd have to look at Exxon for their discipline, not only with regard to their investment on the upstream, but their general tendency to stick to investments that will perform at lower commodity prices.
Kevin, we thank you very much for your time. Kevin Book joining us there from Clearview Energy Partners.